Yo, what's up, Tony? What's up, everybody? Hope y'all doing well. Yeah, if y'all could let me know if y'all could see everything okay, hear everything okay, that'd be much appreciated. I tried to make it so the lag that generally comes on live streams, I got it down to 6 seconds, 5 seconds. But I just want to know if if the quality, like, can you guys read this in here? It's an old note, but can y'all read that? The white writing? And can y'all hear me okay? Just let me know in the chat. Yeah, once y'all confirm that, we can get started. Yeah, okay. Awesome. So, with that being said, we've had some pretty interesting price action. Let me make sure that I have all my assets. Clean charts. Sorry, bear with me. Gotta set everything up. So we called a couple moves yesterday, which were pretty nice. We were 3 for 3 yesterday. I personally took a small short, but I called out the buy, right? The buy reached up. What did it reach up into? The daily wick 50% level. Once it hit that, it gave a small little rejection that sold off. And then we also called, let's see, where was it at? It was not later. So yeah, there was the buy here because we only trade the New York session, right? The AM session. We called the buy up into the daily wick 50% level, right? We called it right in here. I got the screenshots. I could pull it up later, but I don't want to take up too much time, right? But we got this one. We called this one well ahead of time. I had one student named Carlos. He took that. I shared it in the free Discord, obviously. But then also in the private group, we did it live. I gave the sentiment, what I thought price was going to reach for. It did, in fact, reach into that daily wick, 50% level. I talked about that and called for that on Sunday, right? I said, I want to see if it can get up there, and then, you know, whatever it chooses to do around that area, we'll be able to make a stronger decision. For whatever reason, it's saying that the chat is disconnected. Can y'all try to type in the chat? It's saying it's connected, disconnected. I don't know what the hell's happening. I don't know why the chat would be disconnected. What? Yeah, throw a one in the chat if the chat's working. Okay. Yeah, I don't know what the hell. Does it show up on your guys' end saying that the chat was disconnected? I'm not sure if it, I don't think it would show that. But yeah, I guess I'll assume that it's working. But yeah, so we talked about a short in here. We also talked about two buys, and I painted them out. This buy in here I gave ahead of time to the free group, so you guys had an opportunity to look at that. Just a good example of waiting and how important the macros are. We had a short session because it pretty much just ran up to levels that we were looking at, and then it kind of died out. So I'm glad that we ended it early yesterday in my private group. But nonetheless, we were able to navigate this, dropping down below. Right, hit a breaker in here, and the price ended up consolidating. So accumulation, the open price is over here. So I guess accumulation over here, manipulation below the open price. Price rallied up, hit this quadrant level of this, I believe it's a 4 hour, or so 1 hour inversion fair value gap. And then of course it kind of held up. London gave one more little leg higher. London was really fast going into New York, right? It continued to be fast. And then right at 6:30, we basically dug lower or close to 6:30. And I did call out a short in here. If we go down to the 30-second chart. So we called 3 trades yesterday that all worked out. I only participated in one of the 3. I called this one out. One of my students took that, like I said, Carlos. And if we look inside this, you'll kind of see some of the logic. So you could see here over on this chart, price ran up into the daily wick 50% level. So this trade going higher was gauging, or not gauging, but rooted in the belief that we were going to get up there. We were in the upper quadrant of an inversion, right? This gray box. So I just assumed that, you know, price could get up into that. We're ahead of we were kind of ahead of the 6:30 open, right? We were at the 5:30 open a.m. Pacific Standard Time. So I still kind of figured that we may be getting caught inside a portion of manipulation, right? So in the midst of all this, as it was going higher, once it hit that, the assumption for it to take a nosedive at least a little bit was permissible. And then when we hit this yellow box in here, you could see that is the regular trading hours gap. So when it hit that, I assumed that it's not out of the realm of possibilities if we break down to try and target that 50% of the regular trading hours gap. And you guys know there's like a 70% chance that it'll get reached into or attacked. Doesn't mean it'll hit it, but it'll be reached into. It's a pretty likely target, right? Even if it's going to continue to go higher. Because it'd be opening up at a premium relative to the previous day's close. So it's at a premium. We want it to go to discount and then go back to premium if it's bullish, and then reverse is true if it's bearish, right? So there's a model that can be shaped right around that simple piece of price action as well. Okay, ICT's mentioned that before. So if you haven't studied it or put too much attention on it, I highly advise you to do so. But yeah, those again, an opportunity in here, right? Once it broke above this, or simply when it dug into it, because it had an inversion for value gap. It also had, I don't know what the hell that is. It also had the inversion, the higher time frame inversion. And it was also inside of the 550 macro, right? So a lot of that stuff aligned. And then we had simply the London high that got targeted. But a little bit beyond that would have been the daily wick consequent encroachment, which again, in my private group, we talked about that. All this whole entire like AM session from yesterday, you know, as I do here on these calls, we talked about it. And we're able to point out before the fact that these 3 opportunities from the buy here, the buy here, which was a breaker, and then the short here, which was a YouTube model. It was the flagship pattern or model that we use in the private group called the Razor model. And it was also a bearish breaker. Simply targeting intraday volatility reacting from a daily wick for the reversal, right, or the slight reversal, reaching for the regular trading hours gap, right, above London's high, right? That's purging liquidity. It's also coupled with the daily wick 50% level, and you could see the response that came as a result of that. Could have also been thought of as a potential market maker sell model here on this lower time frame. Just a simple retracement, right? But because it failed that also gave me the initiative to want to identify this as well. And one of my friends that's in the private group also took it. He took something up here. He unfortunately ended up getting stopped out because it was really nasty, right? Stopped out in profit. His stop was down here, right? I think he had his entry 25,640. So it was like right there. And then I kind of played games, and it's a Monday, right? And it was really nasty. So holding it was not something he felt comfortable doing. I probably would have been the same way. So it happens to all of us. But the stop was down here, right? The framework ran up another 40, 50 points. But definitely a 20 to 30 point run was offered there. From this initial entry, where was that? It was at this breaker that I called out. And then right here inside of this price delivery, going lower, targeting this, even though it didn't get there, it still offered enough, 20 to 30 points, with a reaction from a higher time frame PD array. And in this one, again, I was aiming for the 50% of that wick, which we could see got tapped into, right? And now, if we take a look at what price is doing overall at the moment, I can erase some of the stuff from yesterday. Yeah, I kind of figured this was going to be something important. That's why I started dragging it. You saw it just it literally just tapped into it. You could see what the vibe is right now in price. We've rallied up pretty aggressively, right? The open price is down here. And if we take, so this is the entire range from up here down to the low. If we take that and we grade that price swing, we got 50% in here. It's ironic how the 50% is holding price. You guys know what I say about the 50% of a dealing range, just an overall range. If we're hanging around 50%, that could sometimes be a real problem. And it does this type of thing. It reverts back to it all the time. So we are kind of hanging around that level. It's not an ideal trading week because of NFP, and it's the start of the new year. So I've mentioned this since Sunday to lower your risk. Don't be a gambling lunatic and go in there swinging at everything. Make price come to you. Okay, what does that mean? Right, that means let it come to higher time frame PD arrays and frame your setup on higher time frame PD arrays. Right, use the PD arrays as reactive, responsive levels. Think of power 3. Okay, analyze what the range looks like. In this case, we've got the open price right here. We got a high here that's left this high. And it's still respecting that 50% of the wick. Okay. So I said on Sunday, if this becomes a displacement breaking down below this, I will be confident 100%, at least for me, 100%, to target this low, 50% of this order block. And then, if we get excited enough, maybe we'll look to see an even deeper drop. But until we get proof of that, we're still kind of stuck in a range-bound environment, right? A large sideways wedge, right? A wedge, right? So, we'll kind of see what it wants to do. We're at equilibrium in here as well. So like I said about that, the lower time frame, right down in here when I was pointing out the graded price swing, right here. Okay, we got an even larger thing that we could look at in terms of that as well, right? We got the whole entire large range there. You could move it to this if you want, This took buy side, purged out sell side, right? It's basically taken out liquidity to the downside. It's ran to the downside. And now it's shifted market structure going higher. So returning into this order block doesn't really discount that we still could go higher. But again, like I said on Sunday, I need to see this get violated. It needs to close above it. Prove it to me. Come to me, right? I'm not coming to you, okay? Price, right? Come to me. So it's going to have to get up above these levels and start to really show that, yes, this order block did in fact act as a reliable support level. We just simply came to a discount. And then once we start breaking PD arrays again to the buy side, I'll be a lot more sturdy in my opinion. Until it breaks this low, there's still a chance for this to want to get up there, right? I need this, at least the low of this candle, because it's an up candle. I need that change in state of delivery. We have one up here. This is a second one. And that's a conservative way, a very conservative way of getting yourself confidence that price is now shifted, right? You may not catch the exact high, right? You can kind of see it in here too, right? If we would have taken out this low, it would have probably continued to drop. But what did it do? It dug lower. There's one change in state. Price did not take out the second one, right? It took out this, but I mean, it's just a small little doji candle. Sometimes, those are effective, but in the grand scheme of things, it's already going to be, in this case, bearish, right? If it was to respect that. And if that was the case, it should have respected this wick in here. If it would have done that and say this was the only candle that formed and we didn't get that change in state closing above that order block here, and then it started tipping, then I would have been a little bit more confident in targeting this low and then the gap down here. Because it didn't do that and it shifted aggressively, what's happened? Price continued to go higher, and we still haven't seen full evidence that it's ready to drop. There is an argument from Sunday, right? We talked about a lot of different things that could lead us to believe drops may take place. The yearly power 3, the SMT at the highs up here with the other indices, DXY potentially going higher, right? Let me pull up the DXY. Let me get the currencies. Sorry, let me make sure that I have everything we need. Bonds, okay, let's... And we can see that the bonds and yields are kind of going sideways, right? I did point out this up here. Said if we stay above this low for the yields, it should stay above it and keep going higher. If it breaks down below it, I'll be a lot more convinced that it might go lower. That would send the dollar lower, generally, right? It's heavily impacted by the yields. The bonds, on the other hand, impact and influence the other assets. Okay, that's why we spend so much time on this every week. And that's why I mention it all the time. It's not about just the asset you trade, right? You got to be able to know what assets support your idea or your other asset and what direction it's going to go. That layering understanding definitely builds confidence. Okay. And you want to be able to trust the things you're doing, right? Trust doesn't come from just that one asset, at least for me, in my opinion. And some of the things I've heard ICT talk about, you can't be one-dimensional. You can be when it comes to execution, but to get to that execution, you want to make sure that you have these other supporting factors, because the market is, it's not just black and white all the time. There's different things that converge on top of one another that lead to a particular thing taking place. So and one of those things is the bonds and yields. Right, but again, we were talking about this high too for the DXY. We wanted to see if it gets above this high, if it even gets there, how it decides to deliver around it. If you look at this weekly chart here, you guys can see that. If you look at this weekly chart in here, we got above this order block, right? It kind of just wicked above it. I'd say that if it displaces above it, that'll be a lot more convincing. And if we close above this monthly fair value gap, that would be more long-term bullish. At the moment, it's kind of sideways, right? The candles are overlapping on this weekly chart, just literally sideways movement. That's a low probability condition just simply by looking at the behavior in the candlesticks, let alone all the other factors that we add on top of it to be even more accurate, which, again, we've had that on full display for a whole entire year publicly. And for literally, it's going to be going on 4 years this year privately every single day, you know? So this stuff just works, right? This perspective works, and it's not too complicated, right? It's the easiest way I've figured out how to identify low probability and high probability, or like for the conditions. And if you go in and back test this, you'll see that it's really effective. It's really helpful, So yeah, we were looking at this upper portion up here. At first, we started off with price going up into the volume imbalance, reacting from this quarterly fair value gap. Right, and as it was printing higher, it's been very slow and lethargic. Okay, it hasn't said, yes, I am absolutely going to rip to the buy side. Sell side is done. It hasn't told us that yet. We have blown past the daily volume imbalance. We're kind of stalling out in this one. The bodies tell the story, so it's wicking above the highs. It's manipulation. And the bodies are still having a hard time closing beyond this. I outlined that as a breaker yesterday, just in case it was to get above and close so that we could use it for today. We can't use that initially going into today as a breaker yet. It has peaked above it. Once it gets above it again, we could then turn it back on and use it. And then, of course, that'll be pretty convincing, because then we'll have a change in state on the weekly chart too. And then, of course, we go down to the daily. Inside that order block on the weekly, we would then have a bullish breaker and then multiple PD arrays being violated to the buy side, which would, in my opinion, turn this to a market maker buy model. That's how we would start to gauge that moving forward for the coming weeks. You could see how that understanding can give you bias for weeks if you can accurately depict where these things are taking place. And then this here, if that doesn't happen, this will probably continue as a market maker sell model potentially. We got original consolidation, accumulation, reaccumulation, smart money reversal, low risk sell, first stage distribution. If it drops one more, that'll be second stage, and it should rip to the sell side if it does do that. All right, but that is the lay of the land here for the DXY. And if we move down lower into this, we can kind of see that it's having a real hard time breaking down or breaking through to the buy side. It attempted it. It stopped people's positions out, and then it immediately dropped lower. That's going to have a positive impact on the currencies. I talked about the currencies on the weekend too. I said that as long as it stays above this fair value gap, we should be fine. And this is a BPR, so it should be able to hold on to that and keep going higher. All the targets I've had outlined for the last couple of weeks, trusting those targets has obviously been fruitful because we've smacked right into it, right? So again, we're starting the year with a bang. Every single day that we've been live calling trades from my private group to now YouTube, every target has been met to start the year off. So I think that's a pretty good way to start the year, if I do say so myself. So we'll see if that continues. We do have SMT here that we've been watching. The euro is obviously the weaker of the two. And we've taken out this trend line liquidity in here as well. So we'll see if that can continue. And as long as we stay above this yellow box, as long as we stay above this green box, which is an inversion fair value gap, or in this case, a reclaimed bullish fair value gap, we will continue and possibly even look to target this eventually. But in order for us to trust that, we're gonna have to see dollar drop, which seems like it may continue to do. We'll see what happens. And when we're looking at the indices, like I said, we have SMT at the highs. We're inside that daily wick. So we're going to want to see, right? We're above this down candle. So we want to see how that 50% is treated. Got a pretty large wick in here too. And then we got fair value gap in here. You can also see that this up delivery, lower, and then the higher movement, if we get back above that again, this is still potentially acting as a breaker. Okay, we're 50% of that's here. So if it gets back above it, it's just more reason why we can trust that these highs may end up being lunch, okay? And it could potentially get up there. But again, we have one change in state for the S&P. And then a second change in state would be when this gets taken out. That would be a very confident turnaround, right? I personally would have a lot of confidence in finding shorts overall opposed to buys if that was to take place, more long-term, maybe targeting the lows down here. If that doesn't happen and we keep delivering discount to premium, discount arrays to premium arrays, internal range to external range, I'm going to keep pushing it higher, right? If that's going to keep happening. And so far, it doesn't seem like it's stopping that delivery just yet. Again, we do have early signs that we may see in the near future if things align, like PD arrays start to get violated to the downside, specifically 3. Double changes in state, right? If we start to see that take place as well across the board, those are things and alongside inverted levels that will get me to believe that price it may look to target sell side for a little bit, maybe a month or two, depending on what happens, and then we'd kind of get away from full risk on buy positions over the sell side. But if that, of course, happens, if it does start to support downside, that's something that we will gravitate to when the time comes. But again, we're inside this wick here. It's going to be very important, like I said on Sunday. And then we have this fair value gap, right? This inversion here, or reclaimed bearish fair value gap. So again, if it was to displace above that, we'd be breaking back above these PD arrays. We'd be breaking back above the wick 50% level, and then we would invert this larger PD array here. You could see the wick, the weekly volume imbalance, which is right here, which is a new week opening gap from a long time ago, has rejected price. So again, these are early signs that price may want to give up the ghost and go lower. I'm assured and confident that it's going to go lower rather than seeking more buy side longer term, at least for like a month or two. If we were to take down this low and shift, basically change in state there off the heels of this change in state, off the responsiveness from these PD arrays opposed to the buy side delivery. Okay, so that is my opinion on all these different assets, right, and kind of where we're at relative to what we talked about over the weekend. And yeah, things have pretty much done and gotten to every target that we've kind of outlined so far. So let me actually go clean this up a little bit, take some of this older stuff off. Are my entries in there? Did I highlight it? Let me go see. Wait, was it on this chart that I had them? Oh yeah, here's the exact markups from yesterday. Just to show y'all what was happening. I sent screenshots to the free community, private group, and I was live with them as well. But yeah, we called this buy before the fact, called this short in here, like I said, like I broke down earlier. Okay, I caught that one, 31 exactly. And then, of course, it kind of turned around, and then we pointed out this as a bullish breaker, right? Inversion, fair value gap, and it just continued. And one of my students and one of my friends too, who started trading with me, ended up taking execution up here a little bit later, which eventually got to the main target that we outlined as well. So yeah, it's kind of the business from yesterday. So yeah, let me know in the chat if everything that we've talked about so far makes sense, and if I have now gotten you in alignment with what I'm thinking. And if you guys have any questions or anything, just let me know. We're not going to be taking any real executions until, or considering any executions until 6:30. But I had a lot to discuss, so I wanted to hop on a little bit earlier. Yeah, just let me know in the chat. I'll be right back. I gotta go to the bathroom real quick. All right, I'm back. I'm back. So yeah. Good morning, Fancy. Good morning, George, Joan. But yeah, let me know in the chat if everything makes sense as far as what we've talked about. It's very important that I know that it makes sense. Otherwise, I should go back and answer things. There's no use in just watching, waiting for signals, right? It's probably going to be a frustrating thing. I do point to things, but I make y'all think, right? Because I'm a shitty mentor if I don't, right? I'm not here to build a bunch of robots. Maybe in some ways that's not an accurate thing. I want you guys to be robots with your process. I want it to be very clear, right? Very objective, not subjective. Or is that right? Well, no guesswork, essentially, right? I want you to be able to make decisions that you can trust. Okay, not just because I said it, but because you know. So, there's no reason to be doubtful. Okay, that doesn't come from just copying trades. George said, okay, yeah, perfect. All right, so again, if we come back to kind of where price is at, again, we're sideways. Right? If we move to the upper time frames, I mean, it's just a nasty mess in there. Okay, it's really a time where people are going to blow their accounts. I'm surprised that I haven't gotten any messages this week. Generally, when conditions are a little bit more tricky, a little bit more catering to experience, right? I generally get a lot of messages, so thankfully I haven't gotten too many. That's not to discourage you guys from sending me messages if you're going through things. I encourage you to do so, because trading can be very taxing mentally, and it's good to have a community that you can go and talk to who aren't a bunch of salesy scumbags, right? Who can actually prove stuff. So yeah, we're pretty much in a range at the moment. We still have the regular trading hours gap from the previous day that's available. So that may be something that price wants to come back into. I'm not too sure when it's going to want to run there. We are ahead of NFP. Trump speaks later. And there's really no crazy folders. So again, we're going to use the open price to give us our potential manipulation. Okay, and if we drop down a little bit, I mean, it's had a very nasty delivery overnight. Kind of see here, ran up, declined, stopped out anyone that was early buyers from yesterday. And we can kind of see how just kind of hanging around, right? This high to that low, 50%, right? It's kind of just hanging around that level. I do want to give you guys a reminder. Don't forget to like the video, subscribe to the channel if you get value from the content, or if this channel has helped you out in any way. Definitely spread the word if you feel inclined to do so, because the whole intention, obviously, of this community is to help, right? I'm not here to sell you false dreams. Trading is really difficult. It's not for everyone, but if you're dedicated and willing to put in the time and effort, it's for you. It's made just for you, for people like that. Okay. So yeah, if you guys could do that for me, I'd really appreciate it. It helps me get in front of more people, and shows YouTube that what we talk about and do here is worth listening to. And it shows me that you guys are listening, right? You guys are listening to the content, you're enjoying it, and that's something I'm grateful for, and I try to make sure there's a lot of value, so you're not wasting your time. Because that's an asset we can't get back. So yeah, thank you guys in advance for that. So, we've had a pretty nasty delivery, right? Yesterday was not the cleanest, right? But we were still able to navigate that. So I think that the same vibe should happen today. I'm going to have the same perspective I had starting the year, right? Since November up to now. That is to have my risk managed properly. I'm not going in here risking a ton, right? Or having really, really large amounts of risk on the table. Which I'm going to have half risk. Maybe if something's clean enough, I'll do 0.75%. But, regardless, I am going to be very cautious, okay? And I encourage you to do so too. I'm only going to consider, just for some ground rules, I'm only going to consider taking executions if I choose to if I do decide to do so during a macro. Okay, it has to be within the right time. There has to be one of the three models that we operate with, which is breakers, our specific model to our community, the Razor model, or the 2022 model. And the frameworks that we are going to operate with is Power 3 and market maker models. So if something doesn't align with that realm of things, if I can't place those things on top of whatever it is I'm trying to execute, there's no execution. Okay, it's either going to be the start of the move relating to one of those models, or it's going to be using one of those models in continuation fashion. Meaning if the YouTube model, just for example's sake, if the YouTube model shows up in here and I see that it delivers and my target's down here, to get back in line with that, I need the YouTube model rules in that price leg moving lower to form again, okay, on the lower time frame. Okay, higher time frame wise, I got to be able to justify the price is going to go in whatever direction I'm trying to see it go in, and I have to be supported by that higher time frame. If I'm not, then we're in choppy consolidation, and I'm just looking for intraday volatility, maybe 1 hour highs and lows, session highs and lows. But if it is in line with the higher time frame, I'm looking for previous days highs, previous weeks highs, or lows, depending on where it goes, and previous AM or PM session highs and lows. Like I said, session highs and lows, like London, previous London, the last 3 days, the last 3 weeks, right? Those highs and lows become important because they're the closest, right? For example, this is the previous week's high, and this is the previous week's low. This is the This is a high from 2 weeks ago, right? This is, one from 4 weeks ago, like a month ago, right? And that has wick quadrants. So if we were to break down below this, those would become my targets, right? The lower quadrants, 25%, 50%, so on and so forth. Okay, and then beyond that, we have this. Beyond the highs up here, we have these equal highs, which is something I got my eyes on. If we are going to continue to go higher. Whoops. But that's, in a nutshell, simplistic way of mapping liquidity. I call that liquidity mapping. Again, I have a whole list of liquidity that I think is important. It's always in the free group. It's talked about every day in my private group. But, regardless, on every video, I mention these specific levels. So it's ideal to go study them. Right. And again, if things don't fit what I've just outlined, market maker models, power of three, previous days highs and lows, session highs and lows, basically anything that we've talked about this morning, right? If it doesn't fit that with one of the three models we talk about, we are not going to execute. If it just stays range bound, then I'm looking for session liquidity or 1 hour or 15-minute or 4-hour highs and lows, depending on where everything's at, right? In this case, we have a previous day's high here, so that's pretty nice. If we do end up holding this, we are still inside that daily wick, okay? So that's a sensitive level. You could see the bodies are telling the story. They're having a hard time getting through that. Once it breaks through that and gives up on that, I will be pretty confident to try to target something like this, right? Maybe it doesn't get there today, right? Maybe it just does a little run that takes out this previous day's high that we just outlined right here. That's more than enough, right? And then looking at this, let's go to the 1 hour. Look at this 1 hour chart. We do have this fair value gap to observe. You see how these highs are being layered in here? If we get DXY to decline aggressively, and we can stay above this, right? And this stop run never gets traded to, and that that gets confirmed by us staying above this. Then I'll keep looking for price to go higher. You guys may have seen me outline this on Sunday too. The yearly wick 25% level. Right, I think I talked about that last week too, if I'm not mistaken. Did I talk about it last week? Maybe not. That's the new wick for the year from that yearly candle. Here's that for reference. Think about it this way too. Power 3 is on the yearly candle. Okay, so if we're gonna have a bullish year, right? Wouldn't it make sense for price to go up, fail to hit this 50% level, and then start to really smash lower, right? Similar to what it did here when we called the low of the year last year, right? This low is inside of a yearly bullish order block. We called the move all the way down into that because we're paying attention to these time frames. So the context runs really deep for the narrative and bias that we come up with. That's why it works. That's why week to week and day to day, maybe not so much from the yearly chart on a daily basis, but week to week, day to day, month to month, using these higher time frames, and at this point, year to year, we're able to execute with precision, or at least forecast at a minimum with precision where price is going to go continuously. And it's because the depth of analysis is pretty spectacular, and it works on all time frames. Power 3, everything that I mentioned that I'm trying to see price fit into for this session, you can take that perspective and move to the higher time frame, right? And you can use it there too. All right. If you look at this like it's a 5-minute chart, that's a perspective that, from what I've gathered from students' feedback, thinking about this from as if this was a 5-minute chart, thinking about how you would feel about it, right? What would this be telling you if this was a 5-minute chart? I guess that perspective is pretty helpful. I know it was for me, and I'm glad to hear that it's been helpful for some of you guys as well. when you're doing your studies, because it really helps ground you in reality. Although this takes a long time, having the understanding of these higher time frames from that perspective, um, it just kind of puts things into context, right? So you don't think that the higher time frames are like a foreign language compared to the lower time frame. It's all the same. The lower time frame is just working inside this bigger time frame, but nothing changes with the analysis, how you view things, the tools you use. When you go from lower to higher time frame, it just takes longer. Okay, it just takes longer to unfold things, right? So again, if we go back to this yearly chart, if price was to run up here and fail to even touch the 50% before it starts to have a rip-roaring effect to the downside, that's a strong indication that we may be bearish for the next, month or so, maybe even longer, right? This was, pretty dramatic at the start of last year. If you go back to some of the live calls, you'll hear me talking about something very similar to this. It doesn't change just because it's a new month, a new week, a new day, a new year. It's all the same. It's continuously repetitive, and you eventually get the ebb and flow of things and how stuff operates, especially being part of a community like this that highlights it like this. All right. So yeah, hopefully everything has made sense so far. And again, if we come back to these little lower time frames, let me actually keep, wait a minute, something's, so that's the clean chart. Right. So like I said, this is a 1 hour potential inversion. Just keep it as that for now. We do got the regular trading hours gap down here that still hasn't been breached, the lower portion at least. So that is inefficient. So if price does choose to stay below some of these levels and it proves that it wants to fail by basically breaking down a little bit, my intention would be to see if we can get this session to close in the rest of that gap. And if it does that, depending on how it behaves once it does that, we'll look to try to see if it can go even deeper. And again, if it was to break through this low here, from that daily chart, we'll have that second change in state of delivery. Okay, and that will basically support a more long-term bearish narrative. That'll also be rejecting from that yearly wick, 25%, and not even getting up to the 50%, not even being able to touch it. So that'll be another thing that kind of goes with a downside narrative being painted. But until that happens, right, price is not really committed to the downside, at least for now, right? So until it does that, we're going to have to understand that there is still a likelihood for us to continue. We also have the layered liquidity, like I mentioned. We have the high, high, high. It's failing to do any delivery through that, right? So it's building liquidity for now, and that's inside that year, the daily 50% of the wick. So if it breaks down, respecting that, you could start to see how it's building the narrative to target sell side. Okay. And if not, we're still above these levels that do support price going higher. If it gets above that wick, right, we don't want to see that if it's bearish, right? If we're trying to transition from bullish to bearishness, we would like it to hold there and then displace, right? If it doesn't do that, we're going higher. I'm assuming I'm more on the side of seeing price try to break these highs up here. And it could do it in low resistance fashion, right? Why? Because we have a failure swing. We still have a bullish overall, we have bullish overall delivery still happening. It's just in a phase where on the higher time frame, the Nasdaq and the S&P are kind of being held a little bit. They are kind of gravitating higher. The Dow is really the king of buys right now. So we'll see if that continues. We do have this as a bullish breaker too. So Dow's going to have to get below that for me to really commit to downside. This low here is going to have to be taken. If that does break down through that, we'll see this SMT kick us lower. And then again, all the other things that we've talked about start to layer on top of one another in terms of whether we should continue to trust buys or if we should transition to sells, and when we should transition to sells. Okay. So again, what I've just discussed is very high level understanding. It's taken years to get comfortable with these concepts, but hopefully I've been able to put these into perspective, all this stuff, and it benefits you moving forward. So again, we're going into the open now, so let's start to pay real close attention to what's happening in here. So again, we do got a stop run. We do got relative equal lows in here. But as long as we stay above this level in here, I'm not really going to be too concerned about price going lower. We got a small regular trading hours gap that just got created. Right. We got SMT at the lows too. So you can see that the bullish underlying narrative that we've been leaning more towards, it's working out. We got a shift above this high. Sheesh, it's rapid, huh? See, like I said, it's probably going to blast this out in low resistance fashion, right? We literally just called that before it even happened. I said that if it does get up there and holds above this, it's going to blast it low resistance in low resistance fashion. And it looks like that's happening, at least for now. So let's see if that can sustain. And then again, we have a main target up here. We can also see this drop and then the higher movement. We can consider that as a market maker buy model, unless it gives up the ghost and comes down here. Right, there's a drop in here and then the attack on the high. That was probably a market maker buy model too, if you drop down. See, you could see consolidation, accumulation, reaccumulation, smart money reversal, very slow, lethargic run. When the sell side is rapid like this, super quick, something about market maker models you want to keep in mind is when there's a fast one side, the other side is typically a bit slow, right? Obviously, it's blasting through the high at this moment, but nonetheless, that overall characteristic, we could see that on display here. Right, so yeah. So I'm going to be waiting till the 650 macro, right? We'll see what we can get from the market. But everything we've outlined is basically falling into place. Pretty much exactly how we said it would likely unfold. Preferred it to stay above this 1 hour. I painted the contingency option, right? To just in case, which is something you always should do. You should learn how to do. I try to teach you guys how to do that and how you can go about that. With every call, hopefully you're getting better at that. But overall, the main objective, being bullish, higher prices, has fallen into place. So we'll see if that continues. And again, if this just runs up here, wicks this, and then gets down below this, I'm not going to be interested in trying to frame out a buy later on. That would then put us in position to target these equal lows and the regular trading hours gap, which we have one up here too. So there's two inefficient gaps that have just been left. One right there, and then we got one over here from yesterday. If we take that off, we could see it a little bit better. This regular trading hours gap idea, right? We have a new day opening gap over here, okay? Well, over here. And then we also have a gap in there too. So going higher, that's part of the narrative, part of what it's reaching for. And we could see these equal highs up here from this perspective. Okay, and then the regular trading hours gap that's up there as well. And then even beyond that, we have another one up here. So there's lots of inefficiency Lots of gaps that if price is going to go higher, it's going to reach for. And it starts to make sense of the narrative. Okay. So again, I'm not interested in shorts. I'm looking for us to go higher until proven otherwise. So let's move up a little bit. Let's go see. We have an order block in that fair value gap. Yeah. Got a down candle in here. So we got a stop run. There's an inversion here. So again, as long as that stays intact, I'm looking to see if this can be targeted. So let's see what happens. Again, I'm waiting until 6:50. I'm not going to take a trade within the first 20 minutes. I want to see how this unfolds. See how it's coming off that now? So we're inside the range, right? It's typical range-bound environment. Taking highs, come right back to equilibrium. From this low to that high, which encapsulates all the sideways movement. This swing low to that high. 50% is somewhere in here. You could see that we're hugging that level. We went to it and through it a couple of times. So that's going to probably be a level that sends price. If it goes higher, if it goes lower, we'll be able to trace back the root of that move, and it'll probably be around this area as well. Generally, equilibrium has that characteristic, especially from the higher time frame. But it happens on all time frames, right? So if we go to the 1 minute, see that delivery in there? Let's watch this wick in here. If this candle can't even close below the 50% of that, that's another sign, especially if we get displacement away. That little signature in price in itself can be a trading model. You just got to know where price is going, root it in a PD array. See how we've got that displacement now? Let's see, can we get a change in state above that? Remember, this high to that low left the bullish order block on that upper time frame. So that trade into it on that upper time frame is being used as a bullish order block. So you guys don't get lost. Okay, right there. So let's see if it holds. If it doesn't hold, what's going to happen? It's probably going to give up. And then that'll probably mean that it's going to take this out. But again, that's contingency. That's not the main focus. Right now, the main focus is what's happening in here. And it's still supporting the narrative overall. So let's see if it can do that going into the macro. But yeah, let me know in the chat. Are you guys getting value from what we've talked about? If you've been with me for a while, how's your experience been here on this channel? Definitely curious for some of you on the YouTube family, how you guys feel about everything. And you guys in my private group, but we talk about it a lot in the private group. We talk about so much. All right, so we got a run on stops up here. So we got to be cautious of this in here. Shifted, right? It's kind of failing. It's kind of being held. So I'm not, again, too concerned about what's happening at the moment. I'm not like needing a trade, and you shouldn't either. It's not promoting the idea that, it's going to do something spectacular. Maybe it does look to try to come back to the 50% here. But again, if it's going to go higher, we need it to stay above this. DXY is definitely not too willing to continue its decline, at least for now. It's kind of just stuck. It's a nasty range. And we got the bonds and yields kind of consolidated here. Watch this inversion here. Let's go see what, do we have anything on the upper time frame? So if we look at this, seems to want to respect that. So let's see if that holds. Whoops. So if price gets back up above this, it may set up another potential opportunity. Using that as an inversion, you notice how we're hanging around the lower portion and the upper portion of the daily open. We have New York open here. So we have both of them in close proximity. So if it does end up shorting, it's probably going to do it somewhere close to these levels together because they're so close together. The best shorts would come from above both of them, but I think I need more evidence, more. I want to get closer to the macro, at least 5 minutes, right? If like this delivers, right, down, attacking the lows, again, we have a plan for that. Target these equal lows, target the regular trading hours and the equal lows down there from yesterday. But I'll catch a continuation, sacrifice the best case, which may end up being right in here. Remember, above both, it's going to offer the best shorts if it does short. DXY is starting to open up, so it may start to give up the ghost and not really hold up in this. But again, this is why I'm waiting for the macro. I want to get closer to the macro. Let it print, let it prove itself to you, and then make a decision. Find your model in continuation. Low, high, lower low, okay? It's been created. So we have this as a breaker. We now have the fair value gap in here holding. It's now really contesting this 1 hour fair value gap. So that's definitely something to keep on your radar. And again, if it does give up the ghost and go lower, right? We have the wick levels down here. We have the low, and then these relatively equal lows. Right? It may not be too spectacular. We're inside of a daily fair value gap too. You see that it's had a very difficult time breaking through to the downside. And this wick in here, see how impactful this, well, not the weekly wick, but the daily wick is? With that daily, oops. The red line right there. Let's see, is this going to offer a speedy move? So it's already offered one potential setup. And here's that second scenario. If this was closer to the macro, I would look to execute something like that because we're supported by that higher time frame wick. But because we are, for me, not too close to the macro, not close enough, I should say, I want to be in the macro. It's a very highly manipulated morning. You can see it's really nasty. It's really nasty in here. So, yeah. It's clearly high resistance environment. It's typical for NFP week. So I am in no hurry. You know, we'll find something more reasonable. That's not to say that if you had a intention to short, right, once it got down below here, if you have a model somewhere in there, I guess I was going to say that it broke this low here, creating the YouTube model, but it didn't. So one of the components wasn't there for the YouTube model. This is trading again into this candle. So if it's going to go bearish, it's going to hold this. And then once it breaks down below this, that'd be another secondary idea to get in for a continuation. If you like order blocks and have studied continuation order block delivery after a move has already committed, right? But you could see kind of why I've been hesitant to try to take a short, or just anything in general. That intuition has proven to be good. Yeah, what? Okay, so now that breaker is being turned off now. So now we got back above this high. We're inverting that. So if we can get a fair value gap in there, I think that'd be something, because now we're closer to the macro. If we can get a fair value gap in here, I think that would be something worth studying. Yeah, so we got that inversion in there. Let's see, or the reclaimed. So maybe it doesn't have to get down to here because we got imbalance, lots of trading, and now imbalance again. So it may treat that as a balanced price range. Lots of trading in there. May be used to send it. So fair value gap in there. Yeah, let's see what it wants to do here. So it doesn't seem like it wants to offer that, so no setup for me. The intention and flexibility in my mindset, what I've just displayed here, when price did something specific like this, breaking above this, we were having thoughts of if this gets respected, if it breaks down below this, a short would be viable to target these equal lows. You notice how it went right to the 50% of the regular trading hours gap, and then it ran away. That was part of the reason why this displacement here had me trying to identify this in here. But again, like I said, could be the case. It didn't, or it did use this as a BPR. So how do you know? Because it acted as a breakaway gap, right? That's an easy way to identify breakaway gaps. There's a reason for that specific fair value gap in that area to be treated as a balanced price range. So it took off. So again, no execution for me. That would have been what I would have executed on if it came down into it, because a breaker setup right in there. Fair value gap. YouTube 2022, right? The YouTube model. It just didn't offer it. And it's kind of just the way it is. It's the way it is sometimes. We got new week opening gaps up here. So it looks like it's gravitating up there. Move up in time frame. We could see that the low resistance delivery, right? The fast movement, it took a little while, right? It hung around, but getting through that, it's still delivering in the low resistance expectation. Okay, it just took a little while, right? 8 people up at the beginning who are not having the rules that we operate with and waiting for that first macro. Let the gamblers get wrecked. What is the purpose in rushing? Right? Yeah, we want to get our goals quicker, but the harder you push, the faster you try to make it, the more corners you try to cut, the worse it's going to be for you. Right? But you could see if you've paid attention today, literally every single different element that we've talked about, from what would throw me off and not allow me to be bullish, when I would decide to go short and find a short idea, and what I would target and why. When I figured the price was probably going to start ripping, okay, and where I was looking to find an extra opportunity, or the initial opportunity that I would be comfortable with, and it didn't offer it, right? It just simply didn't offer it on that 30-second chart. It did offer it, of course, on the 15-second chart. What a mess. That's definitely something that we all face, right? If I would have just went to the 15-second, I would have been like, oh, there it is. Oh, yeah. That's how the cookie crumbles, though, right? That's trading. It's the life of a trader. Sometimes that happens, and we got to accept it. Okay, but nonetheless, the whole idea literally unfolded perfectly. And if you were a little more ballsy, or you were on the 15-second chart, which, you know, one of my students probably was, that's on the call from my private group, you see that this pretty much offered the balanced price range characteristic. The breaker never really got to it, but it did offer the fair value gap. So the YouTube 2022 model definitely unfolded in there. Shift in market structure, run on stops, fair value gap, buy side targets, low resistance, liquidity signature. Now, if this would have ran up above that, it would have been a lot harder for it to get up there. So if it did choose to get up there, which sometimes does still happen, it would slowly grind its way up into it. But because there's this failure swing, just like we anticipated well in advance before we even, you know, got close to where we're at, you know, we've basically ran through it with the characteristic we anticipated if it was going to go up there, which is something that we focused on mainly and had contingency plans for if it wasn't to work out. But that was the main focus for those of you that may have just hopped on or are new to the channel, right? But there's always a main focus. It's not like, oh, here's an up arrow, here's a down arrow. There's always one focus with a contingency plan. So, because like, if you're trading and you don't have an idea of how something can go wrong or when something can go wrong or what to do when something can go wrong, you're setting yourself up for failure because you're demanding, because of that perspective, clearly you're demanding that you're going to be right every time, and you're not. I'm not right all the time. I'm right most of the time, which I prove. But that doesn't, you know, doesn't mean I have to get all, I should get all up in an ego trip and force perfection on the market, you know, without making any contingency plans. You know, hopefully I lay out the process of building a contingency plan in a way that you guys can apply and emulate. So 1 minute. Yep. Pretty much, Carlos. Speaking of Carlos, I was talking about you earlier, bro. I was talking about you earlier. Not sure when you hopped on, but yeah, I agree. Right. If I was paying a little bit more attention, that would have been something that would have been reasonable. Because again, I'm in no way thinking that shorts are coming, unless it proves it. You know, when it does prove it, it'll be easier to get involved because we're not an emotional wreck every day like most people are. Well, most of these professionals, right? If they even go live at all, right? But, you know, respect to everybody, though, you know, but, you know, you got to call a spade, right? So, yeah, let's see this order block in here. Carlos, you're absolutely correct. And there was your 20 to 30 points, brother. Carlos, did you engage that? Carlos is a savage for my private group, by the way, for those that may not know. He started with me on YouTube. You did? Beautiful. If you could send me that screenshot or send the group that screenshot in the private group, I'd like to see what it looks like. And I hope you took the 20 to 30 points because remember, NFP week, standard protocol is 20 to 30 points. Here's that return down into that. Got a fair value gap in here. Got this wick here. So the 50% of that wick ideally should be a sensitive level. It could reach down into the order block. I would prefer to see this wick hold here. Now we're inside a new week opening gap. You see that mark up here? So maybe that's going to act as another supportive level in this run that we see going higher. If we take the low to high, 2 to 2.5 standard deviations is right above our main liquidity pool. So let's see, can it get excited enough to get up there? It's definitely got my attention with how perfect it's aligned. Yeah, hopefully you guys got value today. Again, don't forget to like the video, subscribe to the channel if you're new. Of course, if you guys get value, if you could spread the word, that'd be great. Posted it in private group. Thank you guys in advance for those of you that do that. I know some of you already do that. Joan. Okay, let me see. Nice. Remember, Carlos, aim for 20 to 30. All of you guys, right? Consider that. I'm not here to give you any financial advice, right? I'm not a financial advisor, but this is the stuff that I do. This is what I think about. This is how I operate. And you'll do what you will with that information. I don't encourage any of you guys to take trades based on my opinion. I want you to have your own opinions, right? What we do here is provable in terms of consistency, and I do it all the time. So again, it's up to you to build trust in the tools that you're being taught. So I just want to make that clear. But yeah, it's pretty spectacular what we do. Nice, and here's one of my students, Nico, just did pretty well on that one. Bang. But yeah, it's nonstop. My private group is we might as well just start a hedge fund, all of us, right? Like we might as well just all go in together and make a hedge fund at some point. Because I mean, it's been ridiculous lately. All last year was pretty ridiculous. But yeah, remember, NFP has this nasty characteristic of promoting a lack of follow through until NFP comes into play. So that's always a risk. So that's why we have to target 20 to 30 points and be content and satisfied with that if it's offered to us. Okay. So yeah, it looks like it's holding in that new week opening gap. It's the current new week opening gap. Oh wait, no, it's not. The red color. Yeah, let's see what she wants to do here, and that is a nice little acceleration. See if we can't get her to keep going. Very slow little dance it's doing right now, huh? It's like, maybe I'll go, maybe I won't. Let's see what happens. It's definitely been a pretty solid drive through the buy side. Yeah, that new week opening gap still hovering above it. So we'll see what she wants to do. You can see DXY causing some problems. Very nasty, slow movement. It's been pretty quick. It was low resistance to get up here, but now that we've kind of satisfied some liquidity, it's kind of having a little paused dance. Oh, there we go. We're inside of that 25% of the yearly wick, so we got to be very cautious. DXY is rallying here too. So that's something that, not gonna lie, I did participate here. Took it out at another 31 points. 29. So got a little itty bitty thing in there. Nothing too crazy. 31.25. And again, my main objective is up here. Again, I'm very conservative when it comes to trading. I'm not aggressive. I don't need to make 10,000 a month. I'm satisfied with 5,000 a month. Okay. I'm satisfied with 2,500 a month. You know what I mean? Here and there. But typically 5,000 a month is the goal. Because I mean, if you can't get that, then it's not really viable to do full time. At least for me, I live in California, so definitely not trying to be a trader that demands 100K a month, 20K a month. Those scenarios happen, right? I've shown those types of things, but consistently, I don't like to risk a lot. I really don't. I don't like seeing 5,000 instantly show up in my account. I'm cool with just gradually hitting base hits, 1-to-1, 2-to-1, if it's offered. But that's me, right? That's the beauty about trading. You can do whatever you'd like to do. You can flip it to whatever you'd like to flip it to. Okay, it's totally up to you what you're trying to do. And here's that move. Just to show you guys I'm not bluffing out here. 31.25, it's not too bad. Okay. I refuse to sit through this because this entry and this one, right? Secondary one in here, and that first one in there that we determined right from the start, I missed it, right? Because I just simply didn't go to the 15-second chart. Mind you, these seconds charts are not anything spectacular or useful to anybody unless you know what you're doing on that higher time frame. Because if you're trading the seconds chart and you have not a clue what you're doing on that higher time frame, you're having a problem. You're going to be involved with so much whipsaw in those lower seconds charts that it's going to be a real serious issue. You're not going to ever be able to trust what it is you're doing. Let me see. Carlos said, I need one more green day, which at top step means $150 to request first payout. Beautiful. That's always good to hear. But yeah, those of you that have been with me for like less than a year here on YouTube, how would you guys say your experience has been? You know, like with the community, is community supportive? You know, what's the vibe? Just like an honest opinion, you know, for everyone that's watching that may not be part of the private group. How would you guys describe your experience? Was it worth joining? Um, you know, do you feel you wasted your time, or has it become an asset that you truly believe is pushing you in the right direction and will one day get you to where you're trying to go? All right, let me know your guys' opinion if you guys are willing to do so in the chat real quick. You don't have to go on a crazy like paragraph if you don't want to, but uh, just definitely curious. I do have a lot of new students. Well, I have literally 19 new people that I've been working with one-on-one till the second quarter. But yeah, if you guys can let me know that in the chat, that'd be great. Just share some of your opinions. And again, in terms of the charts, continuation, we're going to have to look for whatever model it is that you operate with showing up again somewhere in here. Where's a good example? Carlos said, for me, learning the Razor model that you teach in the private community. That's awesome to hear. It's funny because you and Michael are the two students that have really gravitated to the Razor model. It's helpful with everybody though, but you two have told me that it's really changed things because it's not only a model, right? It's a systematic sequence that price does at almost every turning point, coupling, you know, fair value gaps, order blocks, stop runs, changes in state of delivery, right? Which may sound complicated to some that haven't been around traders that know what they're talking about and how to teach it properly. But it's really not. You know, it's step by step. It's very visually obvious if it's there or not. It's kind of the same dynamic that can be had with all the models that we use, right? I specifically only use the Breaker 2022 model and the Razor model, which is my model. You know, incorporates many different things. No one teaches this specific model. It does use some common components, like if you're talking about PD arrays, you know, they're all common at this point. And it's just a recipe that we've or that, you know, I've come up with, and it's very helpful. It's not changing, you know, ICT stuff. It's incorporating his things in a way that made sense to me, and I turned it into a model, right? And it works. All the models work, you know. So yeah, for Carlos, the Razor model was the game changer. And George said, Chris has helped me take a major leap forward. That's amazing. Yeah, George. George has to be one of the most consistent students with the one-on-ones. We're on a lot. We're definitely on a lot. But George, would you say that every time we talk, there's always at least a week, at a minimum, a week's worth of study that's given just from the conversations, and you know, we're very I'm very generous with the time, so you guys are never in a rush. I definitely leave you guys with a lot to chew on when we're on calls, even on these calls on YouTube. I mean, it's you know, it's a lot of stuff, and hopefully I don't make it sound complicated because it's really not. But it's just like anything, you know, if you're trying to learn a new skill, right? It takes time. There's details, and it's not necessarily the most simple thing on the planet. It's definitely the hardest way to make easy money, but it gets easier over time. And when you're around a community like this that not only has a mentor that knows what he's doing, who proves it, which I do every single week, including today, um, but also, around us, we have a great community. We have students that are of all ages, of all skill level, from brand new to, up to 7, 8 years experience, more than me, you know, and we're able to share wisdom with each other. And we celebrate our wins. We're there to confide in each other if we're in like a tough streak. And I built a culture here with the help of you guys, that I personally appreciate and would have appreciated if I could be a part of it. So thank you to you guys, because you guys are freaking awesome, right? And let me see. Carlos said I went from failing challenges one after another, and in about 3 months, I recovered an account from drawdowns, passed the challenges, and am very close to requesting his first payout. That is an amazing statement, Carlos. I didn't know that. Oh, I think we talked about it before. But yeah, that's amazing. And we don't even work on a one-on-one basis. I mean, I guess the live streams is just like a group session that has like it's like this, right? And I'm very attentive to questions. We spend a lot of time breaking down all the questions. It's always like an open forum with the one-on-ones, or the just simply the group access. Because we go live every day. Like, I don't think I missed one unscheduled call last year with the one-on-one group, or the private group. Just yeah, because dude, it's crazy. The live calls are like group calls, but it's not like attention's not given. It's just like this, right? Like, I'm attentive to all of you guys, but we do this literally every single day, even days when there's no trading. If there's enough students on that want to hop on, otherwise, I just sit and do my studies and send out things that I feel are important. But we're ahead of everything. We're ahead of most stuff. We're definitely ahead of most mentors, right? It's not hate towards anyone, right? I love and appreciate everybody, but we've all been hurt in one way or another from some dumbass on the internet, not really teaching anything that they're actually good at. They just hear the lingo and sound smart, but never can apply it in practice. And a lot of them that do, that claim they're this or claim they're that, fall right on their face, and they overtrade and over leverage. They don't lead by a good example. But here in this community, I make it a point to lead by example. It's over the years, I do say that being a mentor, like that interest that I developed in my 3rd year, because I was already starting to see, like, okay, this is what I have to do. And I was already passing funded accounts. I was already taking payouts. I already knew kind of what my system was, because I obsessed for 3 years. And I think that mentoring really has helped me. It really did help me when I first started force the discipline that I wanted to have. I had discipline already, but I feel like it just amplified what I needed to do, because now it's not only about me. I want to guide you guys in a way that that I would have wanted to be guided. I don't claim to be the best trader, because I'm not, but we do pretty well. And the students that listen to what it is that I have to say, and then listen to some of the experiences that some of the students in this community have. I think it's definitely an invaluable asset. It's been an invaluable asset. So you guys are just as much of an asset to the community and each other as I am, as you think I am, right? So it's kind of like a group effort. And I know trading's a solo sport, and we don't discount that. We don't sugarcoat that at all. At the end of the day, it's still going to be you versus the chart, you versus yourself, not the chart, you versus yourself, because the market is just a neutral weapon that's obviously manipulated to, really make us fail. but there's ways to get in line with it, and as long as you can overcome yourself, if you have a system that works, which I showcase every day in my private group, which the QR code, I think if I point that way, the QR code right there is for those that want to go check out some details about that. So definitely go scan that QR code or click the link in the bio if you want to go see more details about that. And then one-on-one access I only do 4 times a year for every quarter. And sometimes it depends, if I think that there's more work that has to be done with the initial group, I'll keep the one-on-ones with that prior group and then eventually kick it back on. Because I really want you guys to succeed. I'm not here to waste my time or your time. I'm here to give you guys the value that you're looking for. And everything that we did today, right, as is generally the case, has played out pretty flawlessly. Again, this is a very education-based community. It's very much a independent thinking factory. Okay. Like, I want you guys to be independent. I don't want you guys to be so solely dependent on me being live and framing things out. Obviously, at first, there's nothing wrong with that, especially if you guys have struggled and then are trying to break habits and see what it can look like if you make the changes. Again, I'm not perfect. I don't claim to be. I'm not the best. I don't claim to be. But we do well, and it's very systematic. It's very repeatable. And hopefully you guys see that when you watch these videos, you learn something every time. And, you feel that you're taking leaps like George said, since he joined. I think George started on YouTube too. I know Carlos started on YouTube too till he became part of the private group. And I have a handful of others that are in the private group. But even students like Tony in the chat, right? He's here every week on YouTube, and he's been making massive progress just from these calls. Because the work that we do with where price is going to go, it listens to what we tell it, right? It listens. But it's more so we understand the algorithm. We understand the code or the signatures, I guess you could say, if you don't want to sound all, codey, right? Which I'm not. I don't even, I've never been into coding really. But I'm getting a little more interested, I got to say, because in the private group, we're developing a indicator that pulls out the razor model. I'm in the works creating a market maker buy and sell model indicator that's going to plot market maker buy and sell models so then you can see them. It's a study tool, right? Something to amplify the studies. We have our custom journal as well. For those that don't want to spend money on journals, you have that option as part of the private group. There's just so much coming. And then, of course, the course that I got for everyone that's part of the private group just comes with things. Nothing's going to change. We're still going to be the cheapest access to high-valued value. If you're looking at things outside of these YouTube calls and you're trying to join that private group, it's going to stay the way that it is. I'm still going to be the cheapest out of everybody on purpose because I know how hard it is. And people that are good at trading a lot of times don't give you access unless you pay them $20,000 or some crazy amount, which I understand because this stuff is valuable. It's very hard to do this stuff. And it's even harder to find people that are worth listening to, who are willing to give you their time, which I'm very generous with. But I'm still going to keep everything the same way, no matter how much value gets pumped in, unless eventually I look to hire some of my students that do hit crazy levels of success or reasonable levels of success, just so I can spread the impact out. But in that case, things might have to get a little different. But we'll see if we ever get to that point. I'm not thinking about that right now, but if it does become something that, we as a group feel would benefit the trading community more, and, I have enough people that are willing to partner with me on that, that'll be something that we maybe end up doing. But for now, that's in the distant future, but it's a possibility. If all these other people that honestly have no clue what the hell they're doing, why, and they're hurting people, why wouldn't we be able to, if this community gets large enough to have the maximum impact, you know? And you guys can help me in helping the industry become a better industry, by when you reach your goals, by giving people a hand up. You know, if there's someone that's struggling and they reach out to you in DMs, hopefully you feel that it's something reasonable to help them out. Because I definitely do that every day, and I remember how it was when I felt hopeless, and even still, when I didn't know what to do, when I was failing and blowing accounts and going into drawdown and dealing with a hectic personal life and losing all my money, getting fired from a job, right? At the same time, trying to do all this and be a single a father, right? A new father at that time. I wish that there was someone that could pull me up, and ICT ended up being that person for me. And he's encouraged us, all the students that were either in his private group or just students that are simply off of his YouTube stuff that become successful. He encourages us to also pass the blessing forward. So I encourage you guys as well, just like I was encouraged to do, to think of these types of things, whether that's starting a channel helping people, or if that's just showing what you do, and then anyone that reaches out, within reason, obviously, right? Sometimes there's a lot of messages and a lot of requests, so you won't be able to get to all of them. Some of us are more busy than others, but again, within reason, that's something you think would be reasonable for you guys when you do achieve a level of success that you want to achieve. Or even if there's someone just starting and they're asking you about ICT Concepts. There's a lot of lies about this man, and communities like this prove that those people are literally just bitter liars. Okay, and just not worth listening to. Right? You guys may have noticed, by the way, that I've kind of pulled your attention off of the chart. Right? I kind of haven't really been looking at it, because look what's happening. Right? Why am I going to have you on the edge of your seat? Right? When price isn't doing anything. I get some of those messages sometimes. Well, you don't focus on the chart enough. Like, okay, well, do you notice when I pull your attention completely off the chart? Do you notice what's happening? Do you want to blow your account? Like, do you want to be a gambler? Probably not. But yeah, so hopefully, some of this perspective and some of the things that we've talked about today, hopefully all of it from the analysis perspective has made sense. Because, you clearly see there's something to this stuff. And for whatever reason, price just went exactly to where we thought it was going to go. It supported the exact narrative that we wanted to see, holding up above this 1 hour fair value gap, right? Continuing to stay reaching for the buy side. Okay, reaching for our target up here. All right, it's done exactly what we've said it's going to do. So, yeah. Let me go look at the chat real quick. Shed, do you guys have any questions about anything? I think this may end up becoming an early session, because we've definitely done a lot so far. And there's been a couple opportunities, right? I ended up taking this one down. I did mention this one down here. This right there as a target, or an execution. I missed it because I wasn't on the 15-second. But like I said, if one of you guys caught it, the narrative was correct. When we weren't on that 15-second and we're just on the 30-second, I said, oh, well, this right here makes me confident if we can get a retracement lower, I'm now confident to get back to getting buys, timing-wise too. Right? 650, got closer to the macro, and look what happened, bang. 5 minutes before the macro too, right? I always say 5 minutes before the macro, 5 minutes after can be still classified as the macro, but ideally we want to see a move begin or a stop run begin going into the macro. And if you see like a PD array, for example, like this one, let me actually take this one off. This is something most people don't know. ICT has mentioned this about macros, but when you see a PD array that's outside the macro, you want to drag that forward. And then if, like in this case, you're bullish, if once price gets through that PD array that you outlined and you're inside of a macro, that is a lot of times going to be when that PD array you were looking at that may have started outside the macro, that may be the time when it gets utilized, is when it comes back through it, right? Trades through it, or comes back in while the macro time window is unfolding. Time and price. Okay. So that's a perspective that you definitely want to put in your notes and go back test this. ICT's talked about it, but in the vast sea of information that he has, it gets lost on a lot of people. Right. Same with a lot of things. That's kind of why we're here too. That's why I'm here to kind of keep your attention on the right things and fill any gaps and holes that are possibly present in your current understanding. Okay. So yeah, now price is starting to open up. We're outside the macro, so I'm not necessarily super excited about this. Again, our attention is up here. It's definitely held up in here. Remember, I have not been bearish whatsoever at all. I haven't said one time, let's consider sells, right? The only time I was considering sells is if this would have been taken out. Okay, because that would have triggered in my response to try to take out these lows, maybe even try to target this little area in here from the gap yesterday on the regular trading hours. Okay, and we can kind of see how this, if we move up a little bit, the 15-minute, we could see how the wicks are very much respecting the new week opening gap. You can see that the wick is respecting the wick, right? The body's respecting the wick. And we do see this here. So if it would have reached down into this, this part of the fair value gap, that's all I would have wanted to anticipate if we were going to continue to be bullish, because this high down to that low, or down to this low actually, or let's go this low to this high, that extreme that encapsulates all this price delivery. Once it breaks outside of that, the high up here, right there, down to that low should be treated as a BPR. Once it gets violated, once it trades through it, 50% right here. You see how price respected that? See how when price got above this high, I mean, it's been pretty aggressive because probably this new week opening gap's holding it, or that's what is happening. But you see how it didn't even attempt to have a deep retracement because it doesn't have to. We already left behind a balanced price range. And if it is in fact going to target something like this, and this is going to be a market maker buy model like we painted early on, we're inside the later portions of the sequence, or the phases, right? So it shouldn't go down there. And it's also delivered through the liquidity how we anticipated ahead of time it would. Right? If you think about it, there's so much stuff that we've talked about today that is just spectacular. Right? It's information that is super, super powerful. And it's the same stuff. Those of you that are with me all the time, that it's repetitive every day. We look at the same things. It just looks different, has a different package, but the contents are very much the same. Right? Whoops. Why is it doing that? Save some things. So yeah, we'll see what it wants to really do in here. Nothing's changed. Very clean equal highs. I pointed this out on Sunday, right? And my opinion hasn't changed. I said that as long as price, right, if it breaks through this, we'll look at this. But price traded into it. I said as long as it stays below that wick area here, the daily wick, it'll probably look to go lower. Did it do that? I said specifically too on well, yesterday with my private group, but I think on Sunday call I said this as well. We need to see how it's going to treat this wick in here. If it trades up into it and rejects aggressively, then it's going to probably look to target the sell side, right? But if it runs up into it, fails to really do anything in that, we're still in an overall potential bullish environment. Just simply came down into the order block here. It did show early signs of it possibly looking to go lower, right? We have to consider power 3 on the yearly chart. Was it potentially going to drop, right, and target sell side? That would have been confirmed if the wick would have been respected. Was it? No. So what was our objective today? Buy side delivery. If you think about it, we were ready for anything. We literally had price cornered and trusted the higher time frame and let it speak to us, which results in the effectiveness you guys have seen. So yeah. With that being said, you guys, I think we will call it a day. Keep your eyes up here, see if it can target that. We talked about a lot of stuff today. If you guys did get value, if you enjoy the content that I do here, and you enjoy being part of the community, definitely don't forget to like the video, subscribe to the channel. It helps YouTube push me out and gets me in front of people just like you, not a bunch of randoms who are signal junkies. Which, I'm always open to helping them fix their mindset, but some people are stubborn, and I like being able to get in front of people just like you guys. I'm open to everybody though, obviously, because I think I can in fact help anybody gain clarity in the market, and it's up to you to get to profitability with the tools. Just like it's up to you to use the tools to build a house. Someone could teach you how to use them, but someone could go and hurt somebody with it, right? Someone can not do good things with it, or just not use it at all, the tools. But if they use the tools that they're being taught with, right, they can eventually walk on their own and do it on their own. It's the same thing with this. You're being handed tools in this community. You're being handed tools through ICT's concepts. But it's up to you to really put them into practice. And I play a small role in helping you guys get to clarity. And I feel that we do a good job of it. The testimonials are amazing. The stories I've heard from students, like, for example, Carlos, saying that when he, first started with me, he hurt himself a lot. He blew money, blew his accounts. But then literally within 3 months, he's been able to recover it, and now he's about to get his first payout. That's not typical. It's pretty common, right? But it's not overwhelmingly typical because it's up to you, like I said, to use the tools properly. David, appreciate you. You're welcome, brother. Appreciate you hopping on. And yeah, so with that being said, I will see you beautiful people here on YouTube on Sunday. Of course, I'll be sending updates every day with the free group. what our intentions are, what our objectives are, sharing different things that we look to participate in. And again, those of you that are wanting to be with me every single day, or think a community like this, being around a community like this would benefit you if you can have more access. I do have a QR code on the screen. You could scan that, go and see the details about that, or you could just DM me and we could have a conversation about it, right? And then you could be a part of the private group, be with me every day. So yeah, with that being said, God bless you guys. Appreciate the support and the love always. And yeah, with that being said, I will see you guys on the next one. Have a wonderful rest of your day, okay?